Good afternoon, everyone. This is Brian Shannon from Alphatrends.net speaking. Today is Friday, the 16th of March, 2012. Let's take a look at the closing numbers for this market before we take a look at the charts. Another good week for the market. The S&P was up close to 2%, Nasdaq up 2.3%, and the financials up 5.5%. Those guys are up now 21% year to date on the financial index, and that's a group that obviously gets a lot of negative press, but the prices continue to march higher. The S&P 500, we saw, of course, that the highs from last year were taken out 2 weeks ago, and then we had that little pullback that got us cautious. But as prices got back up through that 136 level, the buyers were back in control, and from this failed move lower came this next leg, which has been a fast move higher here. And we're up to we're at a trend line. Today was kind of flat, but again, for the week, it was a great week. And if we take a look at the weekly perspective here, this is last year's high. Now the next logical level that we would expect to be a battleground, if we've been talking about this, first of all, the level we were at was prior support, which then became resistance last year. Now this prior support level from mid 2007, mid to late 2007, which then became resistance in mid 2008, becomes the next level focus area. It doesn't mean it will be resistance or the market's going to turn backwards from there. It's a potential level of resistance, and it seems as though it should get there fairly easily. The market is getting quite extended here, and if you look at this chart, look at the let's look at like the 65-minute time frame. It's pretty scary to think that we broke that trend line and recovered. But it's really been just a pretty consistent uptrend, and it seems extended, and like maybe it can't continue to move higher. But that's in fact what it is doing, and that's what we have to listen to is first and foremost price action. That's what I've always said and will always continue to say. People have been looking for tops. I get emails like you wouldn't believe with people saying, "Well, this oscillator is telling me this or that," and it's good luck with the oscillator, good luck with the indicator. I'm going to trade based on price. It doesn't mean we should ignore volume or oscillator and other indicators. Those are good little, very small pieces of the puzzle, and there's a lot of them available. And on this chart that I'm using here, which is brought to you by Realtick, and Realtick is going to start sponsoring these Friday videos. They get, I told them they get more views by being around on the weekend. So if you have a chance this weekend, go to realtick.com and take a look at that trading platform, because it has everything that you need, and there's multiple brokers and clearing firms that you can use. I recently switched brokerage firms at the beginning of this year because I was concerned with, for a number of reasons, but one of the primary reasons was after the MF Global, the clearing firm that a lot of these brokerage firms use, well, some of them, is Penson Worldwide. And Penson continues to say that they don't have troubles, that we're converting debt and all that sort of thing. But this looks like a stock that's, who knows, going out of business. Anyways, they've got problems. I don't know what their bigger issues are, but my money doesn't feel safe at a place like this, so I'm not there. But back to the markets. The S&P 500 continues to be innocent till proven guilty. I think that next week our first more important level of support should be found at about 139.30. So, we had a little bit of a pullback after Tuesday's gain, on Wednesday to that level, and that's where we see right now that rising 5-day moving average. I don't expect the market is just going to magnetically gravitate towards 144.5. But I wasn't expecting for the market to hit that 138 level from the inverted head and shoulders pattern so quickly either. The point is, we can look at these things and say these are the potential levels, but our number one focus is and always should be managing risk. So if we break below 139.30 and hold below that, then I think we become a little bit more defensive. Otherwise, it's not necessarily pedal to the metal, but it is innocent until proven guilty, and looking for the tops. I don't think you can find anyone who's been happy with any strategy that's tried to embrace that is trying to sell short into strength this year. As the Nasdaq continues its monster move here as well. Great gains again this week, and what were the numbers? I think we're close to 3% if I was remember correctly. But anyways, it remains same story here. We saw the shakeout a week and a half ago. We held above that $63 level that we were looking to see if it would hold as support. It did. From that failed breakdown came that fast move lower. If you think about the psychology of it, again, well, you know what? I already went through that discussion, but you know, you get the weak hands out, then they move back in, and that sort of thing. But I'm going to be talking more about that in the future. But the point is, we've had this nice rally. We're right on a trend line. As we know, breaking a trend line does not mean, and you know, the latest trend line break there. Is really the best indicator of that. Breaking a trend line, it was good for a day and a half of weakness, but it does not mean that the trend is reversing. I say that all the time. It means that the rate of ascent has slowed, it needs to consolidate, and maybe trap some shorts, which it did in this case. But anyways, back to this 10-minute time frame for the NASDAQ. We're right on that trend line, and I think that the Wednesday pullback lows at 66 are going to be the important level early next week. So as long as we hold above that for now, innocent till proven guilty. Below that, we have, maybe a gap fill down towards about 65 and a dime or so. So keep your eye early on at 66. The weekly and monthly time frame, as we know, we've exceeded this 65 level. There's really, a big hole to fill in here. It doesn't mean it's going to just fill it all in at once, but there wasn't a whole lot of volume that traded in there. Now, the nature of what this index is has changed a lot over those years, but the fact is there shouldn't be, from an index standpoint, that psychological supply that should be coming out because there was a heavy level traded in the past. And I say a psychological level of supply because if you think about it, if anyone's really holding from 2000, here we are 12 years later, or 11 years later, basically. If they're still holding and looking to break even, I just don't understand that psychology. I think that the market pretty much washed most of those people out. So there's not that natural source of supply that there's actually someone holding the cues from $75 a share who's looking to break even. If you are that person, good luck. You play a different game definitely than I do. And anyways, one day hopefully you'll break even. Russell 2000 right up to that 83 level, and it's hammering away at that. It's good to see it's holding at the top end of the range. Of course, we had the range of 81 to 83. We broke down below that right to the rising 50-day moving average, and the market recovered from there. We've still got this 83 level. We've got the higher lows coming into it. So early next week, I think what we want to see hold is really probably about 82 and a dime. If it holds that, 82 to probably to 82 and a dime. In this area should be a band of support which is found. But otherwise, it appears as though this market is actually building energy for an upside breakout. That's what as I said before, even this breakdown, I said these consolidations generally resolve themselves in the direction of the primary trend. Well, now especially that we've broken, shaken some people out, we're back to the top end of that range. It looks poised to break out from here, and if it can do that, the next levels of interest would be about $85.80, and then right up near the all-time highs at about $87. So just keep an eye on basically that 82 level. If we can maintain above that, then we continue to give the benefit of the doubt short and intermediate term to the buyers. The semiconductors got right up to the top end of its recent range as well. That's that 35.5 level. It's had a nice run, and you want to ask yourself, where has it come from? Well, it's just come from 32 and basically 33 to 35.5. So not quite. Well, it was about 7% or so. It would be ideal really to see it pull back even towards this 10 and 20-day moving average down towards, again, that 34.50 level. If it was to pull back down towards that 34.50 level once again and then kind of bounce around and come back up and break through the 35.5, that would really be the ideal way to build the energy to push back through 35.5 and then continue up towards 37.75 to 37 where we saw the highs last year. So in the semiconductors, I think we're a little bit more lenient. We want to give it down to maybe about 34.5. Ideally, it wouldn't pull back quite that far, but it would still be okay, I think, if we hold above that. Financials had a great week, as we know, up 5.5%. And they did what, these were the lines we've been looking at for the last couple weeks. We've been holding in, we had been holding in that $14.70 level, and then we blasted up to the next level that we were looking at as potential resistance right here at 1540. And just in the last 2 days, we came right back up to the next area that we said this is potential resistance? Think back to earlier this year, all the people who were, looking to sell short at the 200-day moving average, and I was consistently saying we still have a pattern of higher highs and higher lows. There's nothing here indicating that just this moving average is going to hold it back. Ideally, we would have maybe wanted to see a pullback to the 50-day moving average or whatever, but we can't place our beliefs and our biases on the market. It's good to say the 200-day moving average often acts as resistance. We'll look for evidence that maybe it'll fail and then short it down to the 50-day moving average back here. But that didn't happen. Instead, the market said, no, we're going to consolidate here a little bit and stair step higher. Now, I think that the financials probably are in need of a little bit of consolidation up near this area, this 1580. But if it can continue to move higher, then we have to say, what are the next potential upside areas that might get some people's interest? And I think up towards $16 a share is what makes sense here for the financials. The fact is we remain in a great bullish environment, and I think that it's tough to say exactly where we want to see hold. Maybe about that 1540, 1530 to 1540 level early next week. But we're in a great uptrend. If you're finding the low risk setups and trading them as when there's the momentum, that is when the stock confirms. Don't just be sloppily buying things because we're in an uptrend, but wait for the short term trend to confirm what the longer term trend is and get near those pivotal areas. I'm not going to say pivot because pivot means a lot of things in the stock market to different people, but at those pivotal levels where you get that first higher high on the intermediate term time frame, if you get those to confirm what you're seeing on a longer term time frame and the trends are aligned, that's what I wrote a book about. That's my main strategy for making money in the markets, and really kind of is in my opinion the lowest stress way to make money in the markets. Hope you had a good week this week, and talk to you next week. Have a good weekend. Thank you.